Buddy. My name is Nancy Gastel, and I'm on the board of the World Trade Center and a member of the Georgia CCIM. I'm so excited that you're all here today to learn about foreign direct investment in commercial real estate. A little bit about the World Trade Center is that our motto is that we grow trade. The World Trade Center Atlanta is one of 320 World Trade Centers around the world. Of course, you know the original one started in New York City. And our focus is to provide access, education, and help our members develop the skills and tools focused on inbound and outbound trade and investment, and of course, connect people to do business together. I'm going to hand over the podium to Richard Slayton, our president of Georgia CCIM, and I hope you enjoy today's program. Thank you.
Good afternoon, everybody. And on behalf of the Georgia CCIM chapter and the World Trade Center, I'd like to thank you guys for joining us this afternoon. I think this program is going to be proven to be very informative and insightful. But a couple things I'd like to mention in terms of our Georgia CCIM's calendar over the next couple of months. We have a couple of programs that are scheduled. We're having our next general meeting on March 15th, and we're also having our 101 class that's going to be held March 5th through the 8th, and on March 7th we're going to have a happy hour with the students, and in April 19th we're going to have a happy hour networking social at the Angela Golf Club, and I would love for you guys to join us out and help us out if you can. So, and what I also want to do is kind of talk about the classes that we are going to offer this year. So we have the full suite of CCIM courses that we are going to offer this year. As I said earlier, we have the 101 course that's going to be offered March 5th through March 8th. We also have the 102 course that's going to be offered May 7th through May 10th. We're going to have another 101 course that's going to be offered in September 9th through the 13th. And we're going to have a 103 course in October 22nd through the 25th. And we're going to have the final 104 course that's going to be offered November 5th through November 8th. So, I think this may be the second or third year that we've had the privilege of offering all of the 4 courses here in the Atlanta market. So that's a major coup for us. And I'd also like to thank all of our past and present sponsors. And if you're present, please stand so that we can thank you for your support of our chapter. The Simpson Company, BB&T Grandbridge, 10X, Bull Realty, Marcus & Millichap, Kitchens Kelly Gaines, Strategic 1031, Renaissance Bank, Stout, Kaiser, Matson, Peak, and Hendrick, First Colony Financial Corporation, Warren Everett, Standard Landscape, Wells Fargo, Richard Bowers and Company, Commercial Experts. Let's give a round of applause to our sponsors. The topic of today's conversation is going to be foreign direct investment in commercial real estate, and it builds Georgia skylines. And the moderator for today is Adam Burns of Site Selection Magazine. And so with that, I'll turn it over to Adam and take it away.
Thank you so much. I hope some of you know our magazine and our organization, Conway Inc. We have a connection. I was talking with Richard earlier about our connection to MARTA. Our founder, Matt Conway, was a state senator and helped co-write the MARTA legislation. And always wondered why there weren't more stops being built. He was an individual who always thought internationally, flew his own plane all over the world, sometimes with his family members in tow. And it was not a corporate jet, it was a small plane, usually a Mooney, and had a lot of stories to tell. And in site selection, we continue to try to tell those stories. We have since 1954. We think we're the leading publication in terms of corporate real estate coverage and global economic development. We maintain a database under our Conway Analytics division that seeks to track every single corporate facility investment where there's new construction involved globally. We depend on the coordination of state and regional economic development organizations to get that data, but we go out and find it ourselves with our own research team. We have a global events team called Conway Events that holds an annual World Forum on FDI. It's been in Sharjah in the UAE, it's been in Shanghai a couple times, and the next edition will be in Liverpool this summer, just prior to their big international business festival. We also have a PR and marketing division in New York and a global location advisory division based in Berlin. And we like to think we cover the umbrella of services involved in corporate growth and economic development. I've been proud to be managing editor at Site Selection for 16 years already. It went in a flash, and I've written well over 2,000 stories in that time, and traveled a lot of the world, learning about things and touring plants and getting my hands and boots dirty, learning about industrial development globally. I thought maybe before I bring the panelists up, I'm just going to say a few prefatory remarks about our coverage, so I don't just make you sit here while I make those remarks, if that's okay. We're going to talk about FDI. It's foreign direct investment. It's tracked by our U.S. Department of Commerce, of course, but I would submit to you that it may be better tracked by your state and regional organizations than the Department of Commerce does and that Select USA does. They learn from us, not the other way around. And I found out some interesting things in covering FDI over the years. A couple years ago, I did a piece called The Inversion Perversion. And what happens in the official statistics about FDI that you see quoted is corporate inversions, where companies get themselves acquired and move their HQ to Ireland, for instance, are counted as inward FDI to the United States, if you can believe that. And so, and I kept asking him, like, wait, is this true? And it was, and I asked what percentage, including M&A activity, was corporate inversions, and the commerce people said a big chunk was. So, you know, put a little asterisk by all those giant FDI remarks that you see touted. It may not be precisely what you think it is. Sometimes a lot of FDI information is suppressed by the Department of Commerce because, as they say, if there are few enough FDI transactions, it could be reverse engineered, which is like a fancy way of saying figuring things out. And the company's identity is revealed, as if we didn't see the steel going up when we drive past on the highway. And so they suppress the data completely, and that doesn't get counted. My point is, it's up to us, and you especially, because you're the professionals in the field. You're the ones that see those buildings going up and the dirt being excavated, and you know what's going on. According to the DC Organization for International Investment, the latest data shows $74.7 billion of FDI in the United States just in the second quarter of 2017. It was a decrease, but still a pretty healthy amount. A lot of CFOs surveyed by that organization thought that the U.S. should focus on modernizing its corporate tax code. This was back in June, so by golly, in a lot of people's minds, that's just happened. And we'll talk a little bit about what that might mean for FDI. Those CFOs were also concerned about things like preventing discrimination against U.S. employers that rely on global supply chains, another thing we can talk about. And apparently the FDI supports 6.8 million U.S. workers, including 20% of all manufacturing workers. So it's, by so many measures, it's a really significant proportion. You may know if you look at the issue of our magazine that you all had on your seats, we've ranked Georgia #1 in business climate, in more general business climate for a number of years, and FDI is a big part of that. And that's why we have a bunch of foreign currency on that cover. It plays a huge role. Just 2 days ago, the Georgia Department of Economic Development, which if you aren't connected with, you should be, released total trade numbers. And this is trade, not FDI, but it's very related. And the trade between Georgia and the world reached 225 unique countries and territories and was over $128 billion. And you see it on the ground, too. If you go out to places like last year, I went up to Gainesville and went to the Kubota grand opening. Kubota's been there for 40 years. They had their latest expansion, had some Japanese drummers doing the ceremony, and there were sake barrels with no sake in them. But it's such an amazing operation up there, and it's just tied in so closely to what our state community college system does, the technical and community college system of Georgia. That itself is an international organization. They're out advising governments in the Middle East and working with German companies and German territories all the time. So it's not just the companies. Georgia really gets it in terms of the global commerce piece and how something like the technical college system plays a big role in training that workforce. Okay, I understand you can't hear me, so we'll just do this. Another thing we'll talk about in a minute is Chinese FDI in the U.S. It's dropped in part because of CFIUS and in part because of the Chinese government wanting to rein it in a little bit. But we'll go into that a little bit and as we go through our questions. Now I'll go ahead and bring up our panelists today. First, I'll ask to come up to the seats here, Margie Stagmeyer. She's a Georgia State University grad who founded TriStar, a real estate investment firm, and she also serves as president of TI Asset Management, independent asset management and real estate advisory firm for international and domestic real estate investors. That company's managed in excess of 5 million square feet of commercial and residential real estate in the Southeast, and they employ 30 professionals. And prior to that, she served in executive capacities for a consortium of international real estate firms. And she's managed over $1 billion in real estate funds for mostly U.S. and European investors. And she is the co-author of a book, Real Estate Asset Management, Executive Strategies for Profit Making. Great. If you could help us all learn how to do that. And next I'll invite up Greg Cinnamon. He's a partner with the Atlanta office of Kilpatrick Townsend, an AmLaw 100 law firm. He focuses on advising public and private companies and financial sponsors in connection with mergers and acquisitions, investments, joint ventures, business dispositions, and commercial activities in the U.S., Europe, Latin America, and Asia. As lead legal counsel, he's negotiated and closed transactions in more than 40 countries. And in addition to the M&A practice, he's represented companies headquartered in more than 25 countries in their non-M&A foreign direct investment activities in the U.S. Greg? And last but not least, Dr. Ismael Fernandez. He's the founder and president of Greengate Consulting, an Atlanta company dedicated to leading international investors to the U.S., and they have offices in the U.K. and Spain as well. He's a board member of World Trade Center Atlanta, and he's a published author in the field of engineering economics, holds an MBA and a PhD from the Georgia Institute of Technology. I love saying the full name. And since 2010, Ismael has been helping hundreds of investors achieve their goals of moving to the U.S. with different investment visas, including EB-5. Ismael? Thanks for being here. And don't worry, we're going to leave plenty of time for Q&A, and I have a feeling we'll all learn as much from people out there as from people seated up here. ready for an interesting discussion. I guess the first place to start, again, I talked a little bit about how FDI, just defining FDI can be a tricky animal. How do each of you define FDI in your day-to-day line of work?
I don't have a loud voice, thank you. So basically it's very simple. We represent a lot of German investors, European investors, and it's whatever money they give us to invest. Or we also pick up clients that are foreign investors in U.S. real estate, and we manage their assets. So it's if it's a non-U.S. investor.
Well, foreign direct investment is pretty much the bread and butter of what we do. We represent foreign investors, individuals, mom and pop shops who want to come in with their families, start their own business, whether it is a gas station or a small hotel to a big hotel. And we also help foreign companies to move headquarters to the U.S. For expansion purposes or because they want to relocate to the U.S. And also, finally, we help domestic developers who are looking to leverage on foreign capital under the EB-5 program, which is, we'll talk about it, is more of a capital tool, leverage tool. So foreign direct investment for me, I mean, represent 100% of my work, and we have seen it coming from all over the place. That we do focus, though, on the migration component of the FDI, which is a much smaller portion. I mean, it's a small portion of the overall FDI. We don't look at just the corporate. As long as there is an immigration component on the investor side, we do work with it. So.
Yeah, and the numbers are amazing. If you look at state of Georgia numbers in terms of immigrant business owners as a percentage of the population, I think it's something like 18% of business owners in greater Atlanta. Greg, I know, like site selection, we tend to focus on corporate end users. And I realize that doesn't encompass all the kinds of FDI. But let's just start there. When we're talking about a corporate end user, a global multinational, or maybe a small to medium-sized enterprise that wants to grow internationally, like the Mittelstand of Germany, you do a lot of work for those corporate end user clients. Walk us through your experience of a successful FDI project that you helped work on.
All right. I'm going to put aside the M&A piece of it and really focus more on where somebody decides that they need to basically do a greenfield investment in some form or format in the U.S., largely because I think that's what the audience wants to hear.
You hear okay back there?
Nope. How about now? How about now? All right.
Just talk directly into it and you're good.
Yeah.
There we go.
All right. That seems too loud.
It's okay.
All right. So, that's awfully loud. All right. So, I've got a project on right now, in fact, for a non-U.S. headquartered company that is seeking to take advantage of a market opportunity that they perceive in the transportation space. So, the way that we get involved is, I'd like to say it's because of great planning, but oftentimes it's like all of us, it's because of who we know. So this particular client has come to us through one of the other offices in our firm, not the Atlanta office. And this particular company is very focused on incentives. So our most recent communication with the client was a ranking of incentives and for various places around the country. And some places that we may not, sitting here in Atlanta and in Georgia, think of as being particularly appealing for a lot of reasons. But I think it's probably well known to all of us that the states are in deep, deep competition with one another. And we're only talking about, at its peak employment, this company will probably employ 300, 350 people. A nice piece. Probably that falls within the median of most normal-sized employers in this country. You don't have the behemoths that employ 10, 20, 100,000 people. Those are fewer and farther between. So they're really focused on the incentives. And so we have been helping them work through the vast array of incentives that every state offers And without some further direction, we've told them this, that individual counties or cities, regions have access to funds and the like, and so we're going to need some guidance on it. But it's just one input. Excuse me, that's just one of the many inputs into the decision. Given what they're going to be doing, they're very focused. That probably is number one on their list, as opposed to how close talent is, where they sit in the transportation network across the country, et cetera. So it's really a long process. It's interesting from a legal perspective to be able to help people at this early of a stage of their planning, to help guide them through the myriad of legal questions and all the business inputs that go along with it. And I'll stop it there.
Thank you. And we'll kind of explore this more further. I know one of the things that happens with a variety of countries of origin is that it's a pretty wide range of knowledge of the U.S. culture and business culture, isn't it?
It's very wide, and I think, and I see this with my own clients when I help them go overseas. We take each of our own experiences with us. You know, European companies coming into the U.S. in particular, the first thing they want to know is, well, if we've got this many employees, what happens if we can't keep them all? Because there are statutory requirements in their jurisdictions on paying severance and beyond. Whereas in the United States, largely unless you are in a unionized population of employees, and provided that you do not discriminate against somebody for improper reasons, we're all employees at will.
Yeah, I remember covering that aspect of when there was talk about unionizing the VW operations in Tennessee, and there was this big kerfuffle, and VW, and I'm putting the emissions scandal aside for now, but VW is used to dealing with works councils, right? It's no big deal to them. You know, it's almost like you wanted to say to the leaders, just be quiet and say thank you. It's going to be okay. But that, yeah, it's a cultural difference. It actually triggers another question for all of you. It's, what would be the top one or two misperceptions about the U.S. that you've encountered among foreign investors looking to invest here?
Well, in my case, it really depends from where they're coming from. I mean, a lot of my clients come from China, or used to come from China, not anymore. A lot of my clients come from Latin America and from Europe.
Speak it.
You hear me okay?
Yes, a little louder.
Okay, this is better. So yeah, a lot of clients come from China, a lot of clients come from Europe, and some others from Latin America. So it really depends where they're coming from. One of the common misconceptions that I see coming to the U.S. is really that they have to pay taxes from day one. And I mean, there is such a high level of taxation in their home countries that coming here and thinking that the high level of taxation at the business level is going to be similar to them is something that they need to understand. One thing that they don't realize, though, is the level of risk from that standpoint if they disappear. So, in other words, if something happens to them and the business is still running, the level of taxation is actually very penalizing towards the foreign investor. So they don't really understand the level of risk that they have as long as they're not a U.S. resident and they're here under an investor visa, the level of planning that they have to have coming here and understanding the insurance that they need to have and the tax planning. So on one hand, they think they're going to get penalized for tax purposes in both countries. They don't realize whether there is a tax treaty or not. But on the other hand, they also need to understand that if they're not residents yet, their level of risk is pretty high because they will have to pay a high premium. Their families will have to pay a very high premium on taxes if something were to happen to them. So taxation is a big issue for them.
Interesting. Margie, misperceptions you encounter?
I have so many, but this is my favorite. Speed of business. So, for example, in Germany, we formed a partnership with a big German developer. We formed a company in Germany at the same time I formed a company in the U.S. Within an hour, I had my name reserved, my LLC form, and my tax ID bank account. It took them 6 months to do the same thing. And we had to fly to Germany to meet with the notar. And what they do in Germany is they read the partnership agreement to you, word by word. And then at the end, the partners all sign it, and they put this big, beautiful wax stamp on it. So, but 6 months, 1 hour. And so when the Germans or Europeans come here, they're not used to our speed of business. And it makes us not as credible.
Understood. I know a lot of people understand and have heard a little bit about the EB-5 program over the years, and it's been in the news more lately over the last year. I started covering it years ago, and the whole regional centers idea. I'd seen examples of some of the bad news stories coming out of the EB-5 program, and I know since you work with it so much, Ismail, could you just walk us through both the opportunities and pitfalls of that program as it stands today, and what it means to the folks in this audience here in terms of real estate and financing opportunities?
Absolutely. Thank you for the opportunity. Well, let me give you a high-level view of what the EB-5 program, for those of you who are not really familiar with it. It was enacted by Congress in 1990 because of the late 80s economic crisis we had. And the whole incentive was to promote the economy, relying on foreign direct investment from those investors who wanted to come to the U.S. and actually migrate to the U.S., so creating jobs. So the trade was you invest $1 million in a U.S. enterprise and create 10 jobs, and we'll give you the green card. Okay. There was an exception to that rule, and is that if the investment is made in a targeted employment area or an area with high unemployment, then you would only have to invest $500,000. You still have to create 10 jobs. Okay, so speed forward from 1990 to 2008, the program was pretty much unused until the economic crisis in 2008, where access to capital was pretty much lacking. Everybody was trying to look for capital, and the EB-5 program became very popular back then. Since then until now, we have seen about $14 billion of EB-5 money coming in. There have been cases of fraud, yes, but like in everything else in life, you really only hear about the bad stories. There are pretty significant successful stories in the EB-5 space. One thing to keep in mind is that EB-5 space, as I mentioned earlier, is one more capital resource tool. If you have all your different tools available on how do you raise capital, you have equity, you have loans, you have tax credits. Well, EB-5 is just one more tool in your Swiss knife, if you will. It's not for everyone. It's not money that you can just ask for and you get. If you think that closing on a commercial loan or a construction loan, it takes time and takes effort, wait until you see EB-5. It may take you actually years before you can get investors into your project. The good thing is that it is cheap money. Investors are in for the green card. They're not in for the return investment. So it's not atypical to see loans back to the EB-5 investor for 0.5 point or 1 point. And then also because of the regulations, the way that immigration law is written, that money cannot be secure, so it needs to be at risk, and it cannot be returned to the investor. So from the cash flow perspective, it's a great tool for many developers. The other thing to keep in mind is that when you look at EB-5 with respect to FDI, I mentioned, it's a very small portion. We're looking at 1% of the FDI overall in the US, so it's a small portion. But when you actually look at it from the real estate perspective, about 80% of the money that comes from EB-5 goes into commercial real estate. Why? Because EB-5 investors, or foreign investors really, they like to see a tangible project. They like to see if they invest $500,000 or $1 million, they can pool that money with more investors through a regional center, as you mentioned, and see that something is being built. They don't like to invest in technology or something that relies on intellectual property, because if something happens, they don't have an asset to go after. So just because of that reason, you will see that hotels, assisted living facilities, mixed-use space, they are the most popular investment models for EB-5 investors and regional centers. So, thank you.
I remember, just a quick follow-up, I remember, we're used to knowing that, yes, most of the interest is coming from China in this program. I remember checking the numbers not that long ago, though, and the number 2 nation was Mexico. I don't know if that is still the case. Can you give us an idea of where the most interest in EB-5 is
Mexico
coming
is high up in the table. China has been historically, and the reason they are no longer coming under EB-5 program is because they have allocated all the visas available in the world. So the wait line for Chinese investors to come to the U.S. is now about 10 years. So it doesn't make sense to invest $500,000 and wait 10 years until you get your green card and you're getting 0.5% on your money. So they lost their patience. They're looking for alternative options when it comes to migrating. So like Canada or Australia. They can still invest directly into the U.S., although there are some other restrictions, as you mentioned, in terms of capital. Mexico has been number 2 for the last few years, but last year, Vietnam is number 2, interestingly enough. And they're reaching the point where there are so many investors coming from Vietnam that they're also starting to face the similar issue as China. But if you have investors coming from anywhere in Europe, Brazil, or India, that would not be a problem. So you can actually get their money right away, and they get the green card within 18 months, which is how long it takes for them to get the process approved, and go from there. So, but yeah, Mexico is still number 3 or number 4, I think.
Yeah, that's really interesting what you say about Vietnam. I know we've seen it in our coverage too, and on the corporate and user perspective, is that, you know, the investment FDI from developing nations is growing. UNCTAD tracked it from 2003 to 2012. It more than quadrupled to more than $4.4 trillion, and most pronounced in South Asia.
Wanted to mention one more thing,
Yes.
if I may. The EB-5 program has been historically very popular in cities like Miami, New York, LA, just because foreign investors tend to want to live near where their investment is. In Georgia in 2013, which were the data we have $37 million of EB-5 money coming and creating over 500 jobs. It's not a small amount, but I think we can do better. And since the Atlanta economy is growing, I think there is a lot of opportunity for the EB-5 program still in Georgia. So I think we're in a good spot to take advantage of that program. So.
And we're not quite to the level that there are in Vancouver, where there's so much speculative foreign investment that they've started putting fees and taxes on it to
That's
curtail
right.
it.
One key difference here is that EB-5 is not speculative in any way, because you don't have foreign investors investing in real estate directly. They're just lending money to local developers who actually need the money to do something that is already in the plans. So it's not that they are inflating the prices of local properties and assets.
Thank you so much. Margie, we know from our friends at German American Chamber, and again, another organization that if you're not connected to, you really should be. They've got an incredibly deep team. They have great offices in the Southeast and in Chicago and in New York. But we know how important German corporate investment is in the U.S. and especially in the Southeast and in Georgia. You've assisted German companies with this process. Tell us a little about your guidance and lessons learned.
I'm going to let Greg answer this one, because I only really do real estate. So it's German companies, I guess, investing in real estate. But are you thinking more of M&A?
Well, it could be either. Yeah, it
Okay.
could be either.
Yeah, I'll do the real estate. There are a lot of incubators around the city, and actually helped one buy their building. That's how I know about this, where they incubate smaller German firms that want to do trade around here. And I think that's been really interesting, because you'll see these German companies, and it's usually run by a German who speaks the language and understands the culture, but they'll basically allow you to rent space in their warehouse. And so you're seeing a lot of medical equipment companies, parts and supplies, engineering companies that'll come over and they'll rent space, like a room, and incubate their company. And it's really interesting. I think that's really going on in most of the cities. So that's sort of how we've seen a lot of corporate investment from Germany and from Europe come over to the United States, is mainly through incubators. My brother-in-law works for BMW in Greer, South Carolina. That's now the largest auto manufacturer outside of Germany, or I think in the world now. And that place is just growing like crazy. I mean, billions and billions of dollars. That's a huge catalyst. So.
Yeah, truly amazing what they've done over there. I was corresponding yesterday with, some of you may know the Baker Donaldson team and knows Sebastian Mize. He advises on FDI. I was asking him yesterday about client feedback to the Tax Cuts and Jobs Act, how that might affect FDI. We know how it's affecting a lot of U.S. domiciled companies. He said his client feedback so far is that It's well received in Europe. It might be an incentive for German companies to reinvest in the U.S. or invest further. A lot of companies tended to minimize their profits on the U.S. side, but that's likely to change now. I just wonder what all of your thoughts are on what the tax cuts might mean to FDI.
I think for the moment, it's too soon to tell. There certainly is a lot of talk about it, and people have certainly taken notice globally about it. The rate cut itself is obviously key, but there are a lot of other things swirling around rate cuts that are problematic, and I will try to keep my political editorializing to a minimum here. But with our unemployment rate down, what was the number yesterday? Was it 4.8 or 4.2? Was it 4.1 even? Okay. That means a couple of things, right? That there are fewer people available in the United States who are unemployed. Wages have not increased really for the last, 20 years in real dollar terms. And we're now talking about drastically reducing immigration. So I'm trying to figure out who's going to work these jobs. Either that or you're going to have a lot of retired people re-entering the workforce. Some may need to, some may not. But it seems incongruous to me that, we've got, the scale is not balanced, if you will. I think people are interested in lower tax rates. People are always interested in lower tax rates. Clients are interested in it, but a lower tax rate's not going to make a bad deal a good deal. And that's probably, in the M&A world, that's the most fundamental thing that I see. There still has to be some driving impetus. It's still true, you guys at Kitchen Kelly's pipe up here, I think it's still true that having a holding company in the United States does not work if you are otherwise headquartered outside the United States, particularly with Canada. The tax situation is just unbearable because of the tax rules. And I'll pause there.
To your point, every year we do a survey of our corporate advisors and end users about top location criteria for their investment decisions. Tax scheme was number 4, and workforce was number 1.
I'm surprised tax scheme is that high.
Yeah.
I was going to add that, yes, it is definitely an incentive to many companies that are considering to relocating in the U.S. From my point of view, the kind of clients that I work with, they want to migrate to the U.S. So tax considerations are really at the bottom of their list. They're looking at the stability of the country they're moving into versus the stability of the country they're moving out of. So we had a lot of investors from Venezuela a few years ago. Not anymore, because nobody has any money anymore because of inflation, and whoever could get the money out of there legally, they did it already. But taxes, it is definitely an incentive. But one thing that we have observed since the new administration came in is just because there's so much rhetoric and so much talk about immigration and how do we want to curb immigration, there is a perception that the U.S. is getting a little bit closer to opening the, even for business purposes, for small business purposes. I'm not talking about maybe Volkswagen relocating to the U.S. or a big company like that. But when it comes to smaller investors, there has been a perception overseas that the U.S. is closing its doors for small businesses. And that is something that we probably need to work against because it's affecting small business and immigrants coming to the U.S. to create jobs.
Margie, you have some thoughts on this?
Talked to one of my German partners yesterday, and there's really no impact from a European standpoint. And I agree, it's too early to tell. But they didn't really, we went through some of the changes. They didn't see any major issues.
Okay. Now, another 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 tranche of FDI, if you will, comes from funds and institutional, either national or institutional funds. I know just this week I was finishing up a data centers article and writing about a Canadian pension fund and Singapore national fund called GIC. that have backed a huge $2 billion data center company called EdgeCore. It was those same two funds, the Canadian and the Singapore funds, that backed a GLP a few years ago, a big logistics concern that just started gobbling up portfolios of logistics properties around North America. Give me a sense of how the leaders at those funds approach FDI when you've dealt with them.
Trying to think, so you're mainly talking about pensions?
Well, I guess, yeah, it mainly would come down to pensions, yes.
I find that most of the pensions that we work with, it's all a function of risk. And their returns in Germany now or in Europe are actually negative. If you put your money in the bank, you're negative 0.02%. So there's a real incentive there for them to invest over here. Also, a lot of the real estate in Europe is so expensive now in the key cities. You're talking about 2% returns. So we're seeing a lot of very static pension funds that get excited when they see a 6 or 7 cap rate over here. So we're seeing a lot of enthusiasm amongst the pension companies. Now, I don't know if y'all are aware of this, but Europe has now BaFin, which is like the equivalent of SEC in the United States, and they're becoming very regulated on the retail investor. So that little $25,000 investor that pulls their money, they're becoming very regulated. We've been trying now for 2 years to get our BaFin license, and we're getting very close to it. But from the individual investor, it's very regulated, but from the pension funds, they're very enthusiastic.
Yeah, and the pension funds, you know, it's part of the greater global private equity complex, right? And they have different investment strategies and different investment styles. I think in my world, the M&A world, the most interesting thing that's happened is that those folks who have historically, past prior to starting about 5-8 years ago, who had invested indirectly, if you will, in companies, right? They did that through funds managed by guys like Blackstone in the M&A world, right? Not, although they've got a whole suite of goodies at Blackstone and Carlyle and people like that. And what the LP, who were formerly LPs, and you'll know this from your own business, you know, the guys that were formerly LPs, as a way to goose their returns, are now demanding co-investment, direct co-investment rights, which creates a lot of work for lawyers. We're all thankful for that. At least the lawyers are anyway. But it's, and you will now find some that are acting more like family, what we would traditionally call in the United States a family office, where they will take 100% of a business enterprise all by themselves. And they will rely upon the professional management that was already in place, if it was professional management. If not, they will create, you know, they'll partner with an operating partner who has industry and business expertise in that particular market segment, and they'll do it. But, you know, they continue to be interested. It's returns and risk, as always.
I want to go in a little different direction now. We touched a little bit on Chinese FDI. That despite the curtailment, there's still a ton of interest. And again, this is another good referral that you might want to jot down. One of the best sources for information on Chinese FDI into the United States is the Rhodium Group, RHODIUM. They track, and they do it by state and by metro area, and it's fantastic data. Since 2000, what would you guess would be the #1 state for Chinese FDI projects, greenfields and acquisitions? Yeah, California, 481. Georgia is 10th on the list. We've got 38, including a ton of money in the entertainment field.
Probably film finance.
I would guess so. New York and Texas are right up there at the top. Michigan, Illinois, North Carolina, South Carolina, you may have heard before about their leadership. And not just BMW, but boy, a whole lot of it is related to BMW and Michelin. Now we've got still interest from Chinese companies. What has been your experience, however, whatever shape it's taken, of that interest from Chinese investors or Chinese companies, be they state-owned or not? And how can folks here best connect to it?
Well, As I mentioned, 90% of the EB5 market came from China. And just because the market is capped by the US government to 10,000 visas, EB5 visas per year, and there is more demand just from China than 10,000 per year, the market is very limited in China. You still have a lot of interest, a lot of foreign investors there in China that want to invest in the US without EB5 migration benefits. But unfortunately, most of the EB5 projects are terminating the marketing of projects in China just because Chinese investors are losing their patience in terms of how long do they have to wait before they can get the EB5 benefits. Having said that, there are other migration programs that the Chinese have access to, like the L1 visa, and those are essentially restricted to Chinese companies who want to open shop in the US and they want to expand. That's the L1 visa. And those have access to that. So we see a lot of interest, and that interest is growing tremendously just because the EB5 doors are closing. The only main difference there is that the EB5, number one, it gives you the green card directly, and you don't have to have a business in China. The L1 is for Chinese businesses who want to expand into the US, and it doesn't give you the green card benefit. So it's still a way to invest in the US. We have seen interest on that type of visa and investment vehicle spike over the last few years. Georgia, you mentioned it was number 10 on investment from China. When it comes to EB5, it's number 13, so we're not far off. But from the EB5 perspective, other countries are going to take the lead other than China. But if you want to focus on migration benefits, we have to go the L1 route, which I think still has a lot of potential.
Very interesting. Thank you.
I have to say that I don't really have any direct exposure to Chinese investment in real estate as an asset class, standing alone. I don't know what those numbers look like. But from the M&A front, and I think maybe that, I had briefly lived in China in 1989, and for those of you who've not been, I mean, it is what you believe it to be. It is a world completely unlike ours. And I think for that reason that what I see, a lot of the Chinese investment really is in existing business and operations, however that may be configured. It is a long process. Getting a signed engagement letter is difficult. Renegotiating my fee 3 times even after the work has been done is difficult. But it is the learning curve for an economy that really, up until certainly Nixon's visit, was really the start for recapturing familiarity with classic business in the way that the West generally does it. So the learning curve is exceedingly steep for Chinese investors. And I actually was on a phone, I don't know, a week ago, 2 weeks ago, with a Chinese investor who wanted to set up a company to start trading Bitcoin and other cryptocurrencies in the United States. And then we got into the whole dynamic of what that was going to require and the know your customer requirements from the financial institutions and how tax inefficient it was going to be to do what they wanted to do, notwithstanding that the interest rate or the corporate tax rates had been lowered, which was probably what drove them to reach out in the first instance. It's just difficult. And then, notwithstanding all that, even in an operating business, you'd mentioned earlier, Adam, the whole issue surrounding CFIUS. For those of you who don't know what it is, Council on Foreign Investment in the United States, Department of Treasury. It's got a lot of cabinet level people who are, and their designees that are involved, that are really focused on what we should allow foreign nationals to invest in the United States. And the expanse of that definition, even under President Obama, had gotten wider than what it had historically been, and there were new regulations issued that expanded that. From an enforcement perspective under President Trump, I think it's even more pronounced and more significant, and we're seeing that is having a deleterious effect on people who are interested in investing because they don't know if they're going to get a deal done because of the CFIUS requirements. And And it's if you've never been through the process, it is a highly unusual process that requires a whole nother session on CFIUS,
Thank you.
or not.
Margie, thoughts on working with Chinese investors?
Stick with what you know best. I'm hanging with the Germans.
Okay. I know we're running short on time. One thing I want to get to especially is when it comes to the nuts and bolts of real estate transactions and brokerage and financing, what are some key points that maybe we haven't touched on that we need to understand about the FDI process in the U.S. and broadly and right here in Georgia and in Atlanta?
Again, it gets down to timing. So if you're going to deal with the Europeans, they're much slower than us. So you just need to be prepared that it's going to take them sometimes months to make a decision. So we always go a year in advance. When I have properties that I'm managing for Europeans, I always plan a year in advance and tell them what's going to happen next year a year in advance. So I think that's the main thing. The thing I love about working with the Europeans is once you have their trust, you've got their trust. So, you don't have to keep reinventing the trust every time you're trying to do deals. So.
Well, when it comes to the EB-5 program, I would have to say, always keep this in mind. EB-5 money is not fast money. So we have to go through a whole process of qualifying the investment for whether it's Chinese investors or anybody else from anywhere around the world. And that involves a series of steps that need to take in place prior to going overseas and finding the investors. Number one, you need to verify whether your project is in a targeted employment area. So roughly speaking, here in Atlanta, anything behind me, it is in a targeted employment area, anything where there is not. That's very rough estimate. So you have to confirm that first. If that is the case, if your project is located in a targeted employment area, that means you qualify for the lower tier of $500,000, which is more sellable in the marketplace. So that's number one. Number two, you need to make sure that we actually are creating the jobs that are required for the EB-5 program, because at the end of the day, this is a job creation program for U.S. jobs. So we need to confirm that with an economic model to make sure that we are creating, in fact, the jobs that we need for the amount of money that we're seeking and the amount of investors that we are going to bring. Then we need to work with a corporate attorney who is going to handle the SEC component, because the EB-5 program is ruled by immigration and the SEC. It's going to be a Reg D offering. And because of that, it needs to follow the rules of the SEC as well. So you need to put together a PPM. And once you have all that in place, and you have a regional center that you know who you're going to work with and how you're going to work with them on financials, then you can go wherever you want to go, or where the regional center wants to go. If it's India, if it's Brazil, if it's Russia, to find the investor. So there's a lot of processes, a lot of steps in this process that need to take place, and it takes just to get ready somewhere between a month and 3 months, depending on what the moving pieces are on the local development here. If everything is ready to go, it could be as quickly as 1 month. But then once you have done that, which is the easiest part, it's just to spend the money on getting ready. Finding the investors is the biggest challenge. So you need to partner with somebody who has been out there before, who has boots on the ground in Brazil or in India, and that can work that hard work for you. Because otherwise you could spend a lot of money on getting EB-5 compliant, and the money's not going to come to you. That's the hard part.
And just very quickly, I'll follow up on something that Margie said. I think that Americans, for better or for worse, sometimes are viewed as being more transactional by our foreign friends and investors. And it's about building on the trust. And just because you don't get this one doesn't mean you're not going to get the next one. Or even if you don't get the next one, that doesn't mean you're not going to get the next one. And it is really about being in it for the long haul. That's not universally true around the globe, but with most of the people from the countries that I deal with, that has been a helpful thing to always keep in mind. And as Margie said, there's a lot of hand holding, because it is a different world, and you need to be ready to take that and make that an investment. And ultimately, it's an allocation of your time and what you want to do in terms of really making this a focus of what your businesses and your practices are.
Yeah, great point. And it leads into my last question before we open it up to questions from the audience, and that is that there is this economic development infrastructure in the state, in the country, in Metro Atlanta that includes the State Economic Development Office. It includes municipalities, regions, counties with their own economic development organizations. It also includes 70 some odd consulates and trade offices. For 16 years, I've been telling myself, I've got to visit 8 more that I've never visited this year, and I just never get around to it. But how could we best take advantage of that economic development infrastructure when it comes to cultivating FDI, including those consulates and trade offices?
So I've learned to speak German really bad. I mean, I speak terrible German. I've gotten in trouble so many times speaking German, but I've learned the language because I've had clients that don't speak English. But get involved with one chamber, like the German American or Italian, whatever you pick, wherever you want to go. That's what I would recommend.
Well, sometimes I feel like I need to learn how to speak English myself. I would say we have a lot of international organizations in Atlanta, a lot of chambers, binational chambers. We need to work together between local chambers and binational chambers. We have the World Trade Center, which is a great organization with a very valuable brand overseas and representation in pretty much every country that we want to do business with. So I think we're in a very international city, and we just need to take advantage of all the resources that are available to us. Sometimes we're just focusing so much on getting the work done that we don't realize that there are so many resources around us, whether or organizations or chambers of commerce that can help us out. And I think from my standpoint, we just need to stay in touch with each other and network a little bit more and get out of the office, to be honest with you, because the resources are here.
All right, I'm going to tell my boss you said that. Well, with that, let's open it up to I think it's a small enough room that we may not need a traveling microphone. If you have questions, and I'll just point you out, and you can say your name and who you're with and maybe who the question is directed to. Okay, so if you didn't hear it, the question is about what sectors are thriving in terms of FDI in Georgia.
Yeah, from the M&A perspective, there's probably not a whole lot of greenfield in fintech, right? Because you need an actual business operation. Although that does happen, but there has been, in particular in the fintech space, which is not only the electronic payment processing, but the software around it, data and information is dramatically huge in that area. You are seeing a concentration of that right now in Georgia, where you see, particularly with startups and growth companies that are being acquired, there's a very, very active market in the UK in particular for companies that are interested, that UK companies are in the fintech space. They come here, they go to Silicon Valley, and they go to New York. Those are the 3 primary areas for fintech activity in the United States currently. You'll see a lot of actually Dutch and other continental investment in that space as well, but there's no question that having industry concentrations is helpful to that, and again, it depends upon what someone's investment profile is. The warehouse space, you're exactly right, that's my understanding as well. I'm not a real estate guy, but from talking to my partners, and I'm sure that's your experience as well, that's entirely true, but it does help to have those now indigenous industries that are helping drive some of that growth. And there's opportunities, obviously, for folks in the real estate business to, as you guys well know, you consolidate locations, you have to renegotiate real property arrangements. There's a litany of things that are, part and parcel of all of that when you're doing that type of investment in the U.S.
Ismail?
Well, to answer the question, I think there's a little bit of misalignment between the industries that are thriving in Georgia versus the ones that are thriving from an FDI perspective. They're completely different when it comes to FDI, at least in my industry. I know Atlanta is thriving on the movies industry, is thriving on the bank merchant industry. I've never seen an investor coming to invest in the movie industry. It's highly leveraged on intellectual property. They're not comfortable with that. And even the banking industry is somewhat up in the cloud for them as far as merchant accounts. I had one investor from South Africa and all my 7 years of expertise in this coming to invest in that particular field, in the merchant accounts. But again, 75% or more of the investments from the EB5 perspective are in commercial real estate, hotels. Assisted living facilities is thriving because of the baby boomers are aging, and we need a lot more of those facilities to be able to cope with demand. We work on a successful project here in Lake Oconee that opened last year, and it has been funded partially with EB5 money, and is finally operating and working well. And just like that, there are plenty of those across the country that are opening with EB5 money. So hotels and assisted living facilities are very much on the rise because of the actual demand. Manufacturing, you mentioned, I think is an important industry to consider in Georgia because of all the tax incentives we have. It's non-union state. But I think just the manufacturer developers, if you will, are not doing a good job on marketing their projects into the EB5 space, because I honestly believe there is a lack of understanding and knowledge that that is actually a possibility. Because in fact, there is a lot of support from Congress to push for EB5 money to go beyond the real estate industry, the traditional hotel and retail estate. They want to see manufacturing jobs. And the manufacturing industry has not been able to take advantage of it.
Yeah. Interesting. I know I'm in the middle of reporting on one FDI project from the UK right now, which is down in Union City. If you have teenage daughters, you may know this fashion e-commerce company, ASOS, A-S-O-S. It's an amazing company that's up to now been fulfilling most of its orders from U.S. customers from the UK, if you can believe that. They're going to have over 1,000 jobs down at this new warehouse in Union City. Very interesting project. So watch for that story in site selection. Any other questions? All right. Well, I guess we have to go back to work, yeah. Thank you very much, Ismael, Greg, and Margie.
All right, thank you everyone for coming out today. That was a very informative session, and I think we all learned a lot. And I'll close with please be on the lookout for more information regarding our next monthly meeting, which is going to be held on March 15th. So with that, everybody enjoy the rest of your week. Talk to you soon.